There are many forms of investing. There is growth, there is value, there's investing for dividends, investing in turnaround companies, and so on. Now, all of these are more or less acceptable in investing circles and have a tinge of classiness and sophistication. Not so with momentum investing. Momentum investing arouses sharp reactions. For the most conventional investors, it's a strict no-no. But it's an obvious tool for a trader, even the mainstay of their trading arsenal. Now for the rest, it's something that surprises them from time to time. For instance, consider the last 1 year returns of the Nifty200 Momentum 30 index compared to some other popular indices. The Nifty200 Momentum 30 index generated about 65% returns. This is far higher than the returns generated not just by its parent index, the Nifty200, but also by the Nifty Midcap 150 and the Nifty Small Cap 250 indices. Now, quite obviously, returns of this kind are sufficient to drive most investors to consider adding a momentum fund to their portfolio. Hello and welcome to ET Money's YouTube channel. Today, we are going to talk about momentum investing. Now, this is not our first video on momentum investing. We did a video on momentum investing about 3 years ago. Now, since then, there have been a few developments in this area, so we decided to revisit this investing style. But what's momentum investing? Well, simply put, it is investing in a stock whose price is going up in the hope that it will continue to go up. In this video, I will discuss how momentum investing compares with the buy and hold style of investing. I'll also discuss the available momentum investing avenues for you if you are a mutual fund investor and how you can pick momentum stocks if you are a stock investor. So whether you are a fund investor or a stock investor, you will find this video useful. Let's first see how momentum investing has fared compared to buy and hold style of investing. Momentum investing requires frequent changes to the portfolio so that you are always invested in stocks that are in momentum. On the other end of the spectrum is buy and hold investing, where a stock is held for a long time. Now, buy and hold investing doesn't mean that you don't sell or don't change a stock in your portfolio. Rather, it means that the stock is held for a relatively longer period of time. So, as a proxy of these two approaches, we decided to compare the performance of the S&P BSE index with the S&P BSE Momentum Index. But before we go into comparing performance, let's break down these two indices. First, let's talk about longevity and churn rate. The Sensex functions like a buy and hold portfolio, with infrequent changes resulting in a low churn rate. On the other hand, the momentum index frequently changes stocks according to its methodology, leading to a higher churn rate. Now, in terms of number of stocks, both indices have 30 stocks. This makes them similar in size and diversification. Next, let's discuss market capitalization. The Sensex includes the 30 largest companies by free float market capitalization. In contrast, the Momentum Index selects its 30 stocks from the BSE Large Mid Cap Index, which is also based on free float market cap methodology. So it's large cap heavy as well. Now, as of May 14, 2024, the median market cap of the Sensex stocks was about 3.46 lakh crore. For the Momentum Index, the median market cap was 1.16 lakh crore. Now, that's quite still some gap, and the Momentum Index can understandably have mid-caps as well. Yet, let's consider this as an aberration in our methodology that we should keep in mind and make adjustments for while interpreting the results. Now, if you would like to know more about the S&P BSE Momentum Index and how stocks are selected for this index, I have mentioned a link in the video's description. Now, as a regular viewers know, average rolling returns are a reliable tool for evaluating performance. Now, as expected, the Momentum Index did better than the Sensex. But what needs to be noted is the margin of outperformance. For 3-year periods, the Momentum Index outperformed by just 1%. For 5-year periods, it outperformed by 0.5%. And for the 7-year period, it outperformed by over 2%. Now, this proves two things. First, the aberration in our methodology isn't really producing highly discrepant results. The returns of the two indices aren't too divergent. Number two, by following the momentum strategy, you can expect better returns in buy and hold approach. But that's half the picture. We also need to take into account the risk involved. For that, let's look at percentage of times both these indices delivered negative returns across various short durations. As you can see, the BSE Momentum Index does better than the Sensex over 1-month periods, as good as the Sensex across 3-month periods, but worse than the Sensex across 6-month and 1-year periods. Notably, over the 6-month and 1-year periods, the gap is also too wide. Now, another way to look at this data is to see the worst returns. Now, something very interesting happens here. The worst fall of the momentum index is less than that of the Sensex in all the periods. Now, this means that while the momentum index did fall more often, it's probably quite efficient in containing the extent of the fall. Now, this also helps further reduce the aberrations in our methodology. In spite of having mid-cap exposure, the momentum index doesn't do badly as compared to the all large-cap Sensex. So, all in all, momentum investing does seem to have an edge over buy and hold investing. Yet, let me caution you before you take this outcome too far. The buy and hold strategy would depend largely on what stocks you are buying and holding. Here, we have taken the Sensex as a proxy for a buy and hold portfolio. A true buy and hold portfolio will have stocks selected by you based on multiple factors, including your preferences and convictions. Such a portfolio can very well outperform a momentum strategy as well. And that's why perhaps there are several examples of ace investors outdoing the markets over the long run with their buy and hold strategies. Secondly, nothing stops a stock investor from also adding mid and small caps in the portfolio so that they can help a stock investor too. But the one most important takeaway from this study is that you shouldn't rule out momentum as an investment strategy just because it seems to go against the classical investment perspective. It has not just proved to be rewarding but can also help you diversify your portfolio. So allocating a part of your portfolio to a momentum fund or momentum stocks can help you boost portfolio returns. And quite naturally, how well you do will depend on how you invest. So let's now move on to the momentum investment options for mutual fund and stock investors. Okay, so if you are a mutual fund investor who wants to practice momentum investing, what are your options? Unfortunately, there is no fund available for the BSE Momentum Index that we discussed a short while ago. But there are two other prominent momentum indices, the Nifty200 Momentum 30 and the Nifty Midcap 150 Momentum 50, for which we have funds available. Now, as the name suggests, the Nifty200 Momentum 30 index picks 30 momentum stocks from the Nifty 200, and this index was launched in August 2020. The Nifty Midcap 150 Momentum 50 index picks 50 momentum stocks from the Nifty Midcap 150 index. This index was launched in August 2022. Now, our older momentum video has a detailed analysis of the Nifty 200 Momentum 30 index. You can check that video if you'd like to know more about this index. Here, we will check their performance since launch. Of course, we have only limited data for them. So let's settle with their quarterly performance vis-a-vis their parents and the Nifty 50. Of the 11 quarters since it has existed, the Nifty 200 Momentum 30 index did better than both the Nifty 200 and the Nifty 50 in 6. It performed worse than both in the remaining 5 quarters. In terms of average quarterly returns, it stands at 5.7% against the Nifty 200's 3.9 and the Nifty 50's 3.5%. So it has done quite well. Now, both its margins of outperformance and underperformance are quite notable. For instance, in the quarter ended March 2024, it delivered a massive 12.5%, while the Nifty 200 and Nifty 50 managed to deliver only 4.5 and 2.7% respectively. In the quarter ended January 2022, it fell by a massive 19.5% when the Nifty 200 and the Nifty 50 fell by about 10% each. So true to its nature, it has proved quite thrilling for its investors. The other momentum index is the Nifty Midcap 150 Momentum 50 index. The available data for this index is even less, but in this limited history, it has done reasonably well. It outperformed both its parent and the bellwether Nifty 50 in 4 out of the 6 quarters of its existence. It outperformed both in just 1. Its average quarterly returns stand at a handsome 8.6% as against the Nifty Midcap 150's 7.6 and the Nifty 50's 4.7%. Now, apart from these two momentum indices, two more multi-factor momentum indices have been introduced. One is Nifty Small Cap 250 Momentum Quality 100 and number 2, Nifty Mid Small Cap 400 Momentum Quality 100. Again, their names indicate where these indices have been derived. Both of them combine the quality factor with the momentum factor. Now, these indices came into being in December 2023 and February 2024 respectively, so their available history is very less. Now, Mirae Asset Mutual Fund has both ETFs and FOS for these indices. So, these indices are indeed investable as well. Okay, so all these were the passive options for momentum investing. There are two active options as well. Samco Active Momentum Fund and the Quant Momentum Fund. The former was launched in July 2023 and the latter in November last year. Now, Samco Active Momentum Fund has done quite well since its launch, delivering about 28% since launch, as against the Nifty 500's 25%. And like other quant funds, Quant Momentum Fund has a mind-blowing performance. It has delivered 41% return since launch as compared to Nifty 500's 18%. But do remember, these active funds have a very short history as of now, so it's not possible to analyze them. It would be advisable not to get carried away by their short-term performance and wait for a couple of years so that more performance data is available for them. So these were some momentum investment options for the mutual fund investor. So as I briefly mentioned at the start of the video, momentum is a pet tool for stock traders. But here we are not going to talk about momentum as a trading tool. Rather, we will take a slightly longer term view and discuss 3 momentum strategies for investors. The strategies that we will discuss are price momentum, earnings momentum, and sector momentum. Let's begin with price momentum. But an important reminder first, when I discuss these strategies, I'll also be discussing some stock picking frameworks and consequently list stocks based on them. In no way are these frameworks a recommendation, neither are the stocks that they will generate. So I request you to do your own research before you use any framework or buy stocks based on them. Our intention is to illustrate how momentum investing works and how you can implement it at the portfolio level. We don't intend to make any recommendation. So, as its name suggests, price momentum is buying a stock whose price has been going up. Our older video on momentum discussed price momentum in detail both on the long and short sides. You can watch the video to find out what we discovered in that study, especially for the short side. Here, let me discuss a framework for picking stocks based on price momentum. First, take a return period. It shouldn't be too long because momentum typically is a short to medium term phenomena. So periods up to 6 months are fine. Let's take a 3-month period. Now, take those stocks that have delivered a return higher than a certain hurdle rate. This hurdle rate could be the benchmark return over the period under consideration, or it could be a flat rate as per your choice, say 20%. Let's take stocks that have delivered a return higher than the Nifty 50's return over the last 3 months. Let's also consider stocks above a certain market cap to trim the number of stocks in the list. Now, as of 13 May 2024, the Nifty 50 has delivered a 3-month return of about 1.5%. Let's consider the minimum market cap to be 25,000 crore. Now, doing so generated a list of 151 companies. The list can be then sorted by 3-month returns and the top 10 stocks can be picked. The top 10 stocks that we selected have a median return of 55%. With returns of over 200%, the top gainer is Waaree Renewable Technologies. After you have selected these companies, you can remain invested in them for say next 3 months and then redo this exercise to update your portfolio. Another related price momentum strategy is around the 52-week high levels. Here, you can identify stocks that are near their 52-week high levels and invest in them. For instance, in the table, you can find 10 companies by 3-month returns that have market cap of more than 25,000 crore and are trading near their 52-week highs. Of course, you can adjust the additional criteria here as per your requirement. For instance, you can adjust the market cap criteria or the return criteria, or maybe add 1 or 2 more criteria such as ROE or profit growth. Now, as you may have guessed, when you do so, momentum isn't the only basis of your stock selection alone. Your criteria is a multi-factor now, just like the 2 multi-factor momentum indices we discussed a short while ago. Another variation of the 52-week high criteria is the all-time high criteria, where you pick those stocks that are trading near their all-time highs. You can hunt for screener websites on the internet that can help you apply this criteria. Alright, let's now move to the next type of momentum, which is earnings momentum. It's a well-known fact that earnings are a major driver of stock prices. So a company that keeps reporting high profits should, theoretically speaking, see its stock price go up. Of course, this is not to ignore the remaining multitude of factors that can have a bearing on stock prices. Yet earnings are a powerful indicator of stock price movement. So in the earnings momentum strategy, you pick companies that have shown a rise in profits over the last few quarters or maybe a couple of years. As we discussed, since momentum is typically a short to medium term phenomena, quarterly earnings would be more preferable to yearly earnings. Again, with quarterly earnings, you can consider those companies whose quarterly profits have risen year on year, or you can consider those companies whose quarterly profits have grown sequentially on a quarter-on-quarter basis. The latter is of course most stringent. So when we looked for companies whose profits have been rising every quarter for the last 4 quarters, we got as many as 155 companies in the listed space. To shorten the list, let's apply market cap criteria of 25,000 crore. That reduced the number of companies to 42. Finally, let's consider the top 10 companies by 3-month returns. As you may have noticed, here we have kind of clubbed earnings momentum with price momentum when we took the top 10 companies by 3-month return. You can very well take the top companies by say market cap or by profit growth rate or some other metric. This suggests that formulating a momentum framework provides a lot of flexibility and you can keep tweaking it till you arrive at your desired combination. But don't forget to review the stock selection every 3 months so that you can replace the less desirable stocks with the more desirable one. Let's now talk about sector momentum. As its name implies, sector momentum is about investing in a sector that's got momentum. Now, you can take exposure to such a sector in 2 ways, either through an ETF or through stocks. For instance, over the last 3 months as of May 14, 2024, the top 3 sectors are metal, auto and power. The corresponding indices of these sectors have delivered 19, 16 and 16% returns respectively. Since this sector is in momentum, you can pick an ETF that invests in these sectors. For instance, for the auto sector, Nippon India Nifty Auto ETF could be a possible option. If no direct option is available, you can take exposure to the top stocks of the sector. For instance, the S&P BSE Metal Index has 10 stocks. Their 3-month returns are given in the table on your screen. You can pick the top 3 or maybe 5 or maybe 10 stocks and hold them for say 3 months. Then you can revisit the top sectors, and if the metal sector is no longer the top sector, you can sell the stocks, and if it's still a top performer, you can keep holding the stocks. You can even mix the stocks of all the 3 sectors and form a more diversified portfolio. Let's construct a portfolio taking the top 3 stocks of each of the sectors. This is how you can place sector momentum. Now, price, earnings and sector momentum are 3 popular and mainstream strategies of momentum investing, but by no means they are the only ones. There can be many others depending upon what metric one is looking at. For instance, a popular strategy used in technical investing is moving averages. So, if the topic of momentum investing fascinates you, you can explore more momentum strategies. But a word of caution. Avoid going overboard on momentum, especially if you're trying to pick momentum stocks. It's advisable to first try and test your momentum model before you allocate a larger amounts of capital to it. Similarly, the available momentum funds have a very limited history, so avoid allocating a large part of your portfolio to them. And this brings us to the end of this video. I hope you found this video useful, and if you did, please do share it with your friends and family, and I'll be back soon with another video. Till then, take care.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.